Up next, really excited, I'm going to ask my amazing audience that's been so great to date in terms of welcoming our thought leaders to the stage. If you can give everyone a really warm welcome as I bring them up. We're going to be talking about emerging markets, where crypto adoption meets real world utility. And this is something that I've seen trend across conferences in terms of enough with the technical conversations. Let's talk about real world use cases, what is happening now, what problems are being solved today, where the technology is behind the scenes and we see the utility at the forefront. And so I'm going to welcome to the stage Amy Oldenburg, Head of EM Equity at Morgan Stanley. Welcome. Let's go, guys. Yes, thank you. Martins Benkitis, co-founder and CEO of Gravity Team. Welcome to the stage. Neil Cunha-Gomes, co-founder and managing partner of Feria Partners. Welcome. Let's keep the energy going. Let's go. Last but not least, we have Soledad Contreras, Director of Partnerships at CoinDesk. Welcome.
Welcome, everyone. Hello. Oh, that light is on my eyes. It's very nice to be back in Paris for Proof of Talk. We've assembled a start panel here. We're going to talk about a topic that personally is very close to my heart. It's about crypto adoption in emerging markets, and we're going to delve into the reasons why people in emerging markets might be using crypto, which sometimes can differ for those in more developed markets when crypto tends to have a more speculative edge. I was born in Buenos Aires, which makes me Argentinian, and now you'll guess my age, but I was there in the crisis of 2001, and looking back at what happened there and then, crypto would have been so helpful to hedge against inflation. But anyway, inflation came back, and crypto made a good use case there as well. So it came at the right time eventually. Before we go into the questions, I'd like to introduce my panel, starting with Amy.
Hi, Amy Oldenburg from Morgan Stanley Investment Management. I've been at the firm for 25 years, almost focused entirely on the emerging market space the whole time. I also sit on our Innovation Council focused on digital assets.
Thank you, Amy. Great to have you here. And I think you are very young as well, but a veteran in emerging markets. So it's great to have you with us. Martins?
Hello, everyone. My name is Martins Benkitis. I'm the CEO and co-founder of Gravity Team. I started the Gravity Team in 2017 in Thailand. I've been living in Thailand for some 10 years now. And Gravity Team is one of the leading liquidity provider in LATAM and Southeast Asia and many other 30+ emerging markets around the world. So we really specialize in understanding the intersection of emerging markets and crypto, and that's been our sole focus. So that's a really dear topic for me, and yeah, excited to be here.
Great to have you with us, Martins. Thank you. And Neil.
Hi, everyone. My name is Neil Cunha-Gomes. I'm here with Feria Partners. We're a relatively young startup. We're actually here to look to bring SMEs on chain in some way, shape, or form. I suppose as this is an emerging markets panel, I should tell you I'm of Indian origin. I spent most of my life as a child and growing up across the Middle East, traveled quite extensively. Prior to this, my background is very much TradFi. Started in structured credit, moved to private equity, then moved to venture capital. I was actually at SoftBank for the last 7 years, leading a lot of their investments. A couple of my portfolio companies were in the Middle East, a couple were one was in Kenya. So good amount of cross-exposure across emerging markets, and really delighted to be here.
Thank you very much. Well, thanks, everyone, for being here. About myself, I am Director of Partnerships for CoinDesk. CoinDesk is the crypto and blockchain website, and we are also the team behind Consensus, the crypto and blockchain conference. Let's dive in. The first question that we have for the panel is, what are the drivers? We were saying just as we started that in developed markets, crypto tends to have a more speculative edge. People are looking to make money. That might be the case as well in emerging markets, but what would be drivers that are slightly different from those. Neil, since I have you next to me.
Yeah, absolutely. I think a lot of the driver was need versus interest or speculation in emerging markets. I think if you look back several years ago, if you look at currency devaluation, you talked a little bit about Argentina, many examples of that around the world. People maybe wanted to store their value, their disposable income, their income in other assets besides their fiat currency, their local fiat currency. It's obviously evolved to many other use cases where people want to be able to trade more efficiently and other things like this. But yeah, stable coins is a very early use case. Hopefully Bitcoin too. I mean, people have been buying Bitcoin in a number of different places. One of the earliest, of course, good examples. But in terms of real adoption, the volatility of Bitcoin was somehow prohibitive for many folks in the early years. Stable coins lent itself much more nicely. Beyond that, of course, it's a much more efficient means of value transfer. And so saving on fees, improving inefficiencies that exist in the Web 2 world or even traditional finance world has been huge levers of adoption. Yeah.
Excellent. Martins, anything you'd like to add?
Yeah, we see different patterns in different countries in terms of crypto adoption. But yeah, you did mention the speculative nature, and actually we cannot deny that because and actually in certain times in emerging markets it might be even more easily visible. For example, here in Paris, obviously we can go to a casino, but say in Thailand or Indonesia, you cannot do casinos, like they're illegal. So you only have like horse racing or lotteries. So people naturally actually draw to crypto for gambling, which is one of the aspects, but definitely not the one I'm most excited for. I think the aspects that are already pushing forward crypto adoption in a positive way, well, the problems that are being solved, I think one of the biggest one is we see in the Turkish markets. In Turkish markets, approximately 4%, stablecoin traded volume is 4% of GDP in Turkey. In contrast to, for example, European Union, that's 0.4%, so it's 10 times less compared to GDP. So those people, the people in Turkey really, really need stablecoins, and the reason, of course, is because of hyperinflation. And a lot of folks over there, as soon as they get their paycheck, they simply put it into a stablecoin because they know that for sure their currency is going to get debased, and for them that's a really strong use case. And the last point is just simply being able to move money around. In emerging markets is much more complicated than how we are used to do it in European Union or in United States in our like large free markets. Oftentimes you have either currency controls or just largely inefficient systems. And again, crypto here is helping out a lot because you can simply use the local currency to buy stable coins, and then you can move it from place to place in and out, and that improves efficiency a lot.
Huge efficiency gains. Amy, you're our emerging markets expert. You would have seen in different markets different trends for adoption. Is there anything you'd like to add?
Yeah, maybe just one thing to add is just the digital infrastructure, which I think is always, unless you're traveling to these markets on a regular basis, sometimes it's hard to get your head around. I mean, even I was in mainland China all last week. I didn't even hold paper currency whatsoever. Everything is fully digitized. India, similar. Brazil, similar. It's just becoming, there was never the legacy infrastructure that you've seen here in Europe or even in the US, and the EM markets just have a huge opportunity because of the mobile adoption, because of this digital adoption. And when you pair that with the fact that penetration of traditional banking was relatively low in a lot of these markets, it's just so ripe for not only the crypto adoption, but if you talk about tokenization for some of the markets that are still a bit sensitive on the crypto side, and you go to any of the markets where they're slightly more conscious of potential offshoring of assets, I will tell you every single one of them is still talking about tokenization and blockchain in every meeting that you go into.
Excellent. Thank you for the overview. Various reasons there. Sometimes it's interesting to see that people see crypto as a safe haven, whereas in other markets it's a very it's seen as something volatile and unpredictable. Would you like to share with us, if anything comes to mind, successful implementations of the use of of crypto. One of the ones that I remember from being at Stellar's conference last year is the Acuna wallet that they use for creators. It's specifically focused on the creators economy, for those content creators to be paid in, from the UK or from Europe or from the US. They obviously don't have bank accounts, but this wallet helps them receive the funds, cutting the middleman. So it's this intermediation, and then the money goes straight to the creators. Is there any, this goes for the panel, is there any other that you'd like to share with us?
Yeah, I think these successful implementations are not actually visible to retail users because they're mainly B2B implementations. And some examples that you can, and I think it might largely stay like that. I think the user interfaces will stay largely similar, it's just going to get more efficient. But some of good examples are remittance corridors that are already getting transformed. For example, one of the largest remittance corridors in the world is that of US to Mexico. And yeah, like the usual players are actually getting disrupted right now with companies that are crypto savvy, that are basically using stable coins and crypto on and off ramps to move, to get Mexican pesos when Mexican workers in the United States are sending dollars. They're sending it to their families, and yeah, they can use stable coins and local exchanges like Bitso, for example, to convert these funds to Mexican pesos. But it's largely, they still use the same companies. It's just that under the hood, these payment companies are using different service providers and cutting the costs in that kind of way. Similar patterns can also be seen in Philippines.
Yeah, actually, I came across a very similar story, except looking at Francophone Africa, French-speaking Africa, and the European Union. And the corridor there is, from what I understand, a couple $100 billion at least in volume every year. There's a great startup started by a guy who was part of, let's say, the Curve team that was bought by PayPal, part of the stablecoin team, and then moved back to his home country of Cote d'Ivoire, and effectively started a stablecoin business to help B2B with remittances there, with that, again, Francophone to Europe corridor. He was basically saying that prior to him coming in, it was about a 10% spread and maybe 3 months sometimes end to end to get money from one place to another. And the reason for that isn't so much the payment rails, right? Correspondent banking doesn't take you 3 months. The real reason was also the data flow. And I think people miss the data flow a lot when they talk about payments to and from. What you needed to do was a lot of paperwork, a lot of stamping, many different intermediaries to basically approve a large transaction moving one way or another. And one thing we haven't talked about yet is money controls, right? There are a lot of countries out there with money controls, Turkey, many others. And to get around this or to be more efficient for businesses, people are searching for solutions and in need of a solution. So he's able to bring 10% down to 3%, maybe up to 3 months, down to 24 hours. After 8 months, he was, well, in less than 8 months, he was profitable and the business is taking off like wildfire, right? You can see exactly why he's solving a real problem with a real use case. And so there are a few examples like this coming up. It's actually quite exciting to see.
Thank you. Is there anything you'd like to add, Amy?
Yeah, I mean, it's different in different countries. I mean, we've seen companies like Nubank in Brazil, they've implemented some USDC usage on the back end to make things more efficient. A couple years ago, we were watching, so we run a next-gen emerging market fund, so looking at some of the earliest stage technology in some of these markets. We were watching the Axie Infinity theme pretty closely when that kind of broke out. It was just amazing to see like multiple users off the same IP address, because you had like 3 generations tapping into some of these games, and then also using the infrastructure to do other things with. So I think that's where, you know, it's a use case, but I think that's the thing you have to realize in emerging markets is people will get very creative because there's not another solution for them. So I think there's, and then I think on the trading side, I mean, you mentioned Turkey earlier. Turkey loves trading. The volumes there are just absolutely crazy. Korea has like an incredible risk tolerance and has been very active in the crypto space. So I think, again, you see different themes kind of popping up in different countries around the world. And I know Neil will talk about it a little bit later, but like another use case, in some of these places, banking's really difficult. I sit on the board of a fintech in the Middle East and Pakistan, and sometimes you need a wet signature to do things. If you can't get on a plane and you can't fly to that country to sign the doc, you're not going to be able to get the money you need. And that's where also sometimes that crypto solution has come into play, because it's just a real-time use case and you can get the cash where you need it immediately.
Yes, you were mentioning Turkey, other countries. I think your risk appetite is inevitably dictated by your circumstances as well. So you might be a little bit more tolerant in certain, which is not necessarily a good or a bad thing. It's just anecdotic. Are there any challenges to adoption that you see as sort of halting the process of adoption in emerging markets? What's stopped? Because it seems like a no-brainer. What is stopping people?
Well, I think it's the same challenge as in global markets is the challenge of user interface. Generally, these crypto, if we talk about payment systems or even exchanges and things like that, their user interface is not always the most intuitive, and it takes a lot. You need to understand what you're doing, and you need to make quite a few steps to get to your end goal. And I think the whole crypto industry still has a lot to do there, and that's the same thing also in emerging markets. And what my feeling is that crypto, and where I think this industry is going and how this problem could be solved, is that crypto can build a lot of under the rails underneath for effective payments and settlements, and also for cross-border payments in emerging markets, but the user interface actually could be taken from existing industry. So if you imagine, here in Europe, everyone's using Revolut. I think we're not complaining too much about its user interface. I'm not complaining too much about it. And what I would expect that it might happen such that companies such as like Revolut or the local players in emerging markets will just, in TradFi, will buy out other crypto players and use their efficiency gains and couple them with their user interface to actually be able to reach out to next billions of users.
Neil, is there anything you'd like to add on user experience?
Just one minor add-on, which is the interesting thing is when there's enough need, people will sort of go past the user experience. And so actually when you look at, and so one of the companies I invested in the past was Consensus. I sit on their board. If you look at where the users are distributed, it's still largely emerging markets for a lot of these things. And so I think the people who complain about the user experience mostly is people in Western developed economies, whereas people who need to access it find a way. I agree, improved education will actually improve accessibility. And maybe you don't need to educate as much if you have better UX overall over time. But yeah, just a brief thought on UX.
Maybe I can just add also, I still think, similar with anywhere in the world, there's still a huge education initiative that has to happen. I was in India last year. I was talking to a couple of very senior institutional investors in India, and we were talking about the crypto space, and they said, crypto's illegal here. And I'm like, crypto's illegal? No, it's not. And they're like, yeah, it's definitely illegal here. And so I went and talked to a friend of mine who covers the crypto space in India. I'm like, crypto's not legal here, is it? And he's like, no, definitely not. So there's definitely still in every country, unless you're intimately involved, there's a lot of headlines that can scare some folks away, really not clear in terms of where the regulatory environment is. We see that again and again. I was in Hong Kong 2 weeks ago talking to a very senior traditional finance head, and they just passed some stablecoin legislation in Hong Kong, which we've been watching, and I had brought it up, hey, have you seen that this has happened? Have you talked to anybody about it? And the response was kind of like, oh, that crypto spot, that stuff is just going to go away at some point anyway, right? So I think there's still these disbelievers that there's something there, they're just waiting for it to fall apart, and the distraction or the complexity of it will disappear.
Yes, I think it now has reached a scale that we are all convinced it's not going to go away. So people will have to get their head around it. But yes, I agree. There has to be an effort done on education, because if people just have to be self-educated in crypto. And I also think, mea culpa, the media also plays an important role in that as well. Unfortunately, if you are trying to self-educate yourself in crypto, the first things that you're going to see are going to be negative, inevitably. You will learn about all the scams, all the hacks, before you actually get into something that's a bit more positive. We still have a few points to go through. I wanted to ask you, this isn't a panel focused on regulation, but do you think there's anything specific from a regulatory standpoint that different governments can do to facilitate adoption?
I mean, I can start there. I think one of the most interesting things is, the one thing the US has not done is really provided historically a sandbox to actually explore and give people the opportunity. I think that's the one place we haven't really talked too much about the Middle East, but UAE has been, and Abu Dhabi specifically, has been pretty supportive to allow people to come and explore and to try to find some of the solutions. I really wish there was more out there that we're doing similar things, and hopefully at some point we see the US or Europe's been okay on that front, but hopefully we see at least the US pick up and participate a little bit there, because you need people and builders to feel comfortable to come out and just explore a little bit and really find that solution and not feel like they're going to have some sort of enforcement action come up against them.
And also come outside. I certainly see in these type of events or at Consensus, there are lots of opportunities for people to download wallets and be given a small amount of crypto to use on activations and spend it. But you feel like they are just sort of preaching to the converted, because people already are into crypto or are curious or know how to interact with it. It's more about stepping outside to the broader user base, I believe.
Adding to the regulations, I think, Amy, you mentioned the case about India's markets, and I think it's a great example case of very unpredictable regulatory environment, because in India, crypto used to be legal, then it was totally illegal, and now it is just 1% tax on every transaction, so it's just boring. It's just boring to trade there because the spreads are lame. But I think I hope that's kind of the trend that stays in the past, because a lot of these regulations in emerging markets are being followed by the leaders, which is in developed countries, which is right now, of course, is kind of everyone's looking at what United States is doing, and US currently is positioning itself as, of course, as a very pro-crypto government. And I think that this will be a catalyst, of course, for the rest of these markets as well. And we are already seeing that they are kind of softening up and kind of following in the footsteps of what US is doing. And I think it's, of course, super bullish sign for all of us here.
Yeah, I'll just add a couple of thoughts. So I think regulatory clarity is incredibly important to gain adoption, right? And so if governments aren't comfortable yet with the idea of crypto or some of the crypto businesses and don't allow them to operate, or don't allow traditional institutions to adopt crypto and offer crypto products to their consumers, then the average consumer just doesn't see it, right? So when I ask people around Europe in particular, what was the platform you used to buy your first Bitcoin or anything like that, it's usually Revolut. Nobody said, oh, you know what, I researched this and I downloaded MetaMask and then I went and on-ramped, and it's just too complicated. They just saw it on an app that they use every day and they're comfortable. Now if somebody in the US says, hey, listen, I bought a Bitcoin ETF, that's great. And that's only possible because the regulator said, here's some set of rules, you follow the rules, great. If you fall outside the rules, we'll come after you. And so I think that clarity as to what's allowed, what's not allowed really helps with this kind of adoption, and absolutely true in the Middle East. In a past life, I invested in Elliptic, right? So it's one of the crypto compliance software providers. It helps banks and other financial institutions really trace transactions through the blockchain to make sure illicit activity doesn't end up in money coming out of my fiat bank account, for example. And so that's a business that is one of the many service providers that actually exist and have existed since 2013 in some cases, to actually help traditional institutions manage this risk, understand this risk, monitor this risk well, and work within the regulatory framework. I took these guys to the Middle East, and at the time it was Dubai, Abu Dhabi, and Bahrain, who were the three main financial hubs in the region to really start to adopt crypto. And even back then, I mean, the regulators were very smart. They were very well clued in on what was going on. They took their time, they started to provide the sandboxes, and now you see a flurry of activity come in, in a short 1 to 5 year period later, right? So I think regulatory clarity is really what's at the center of it all, and I think as you think about emerging markets having all these needs for solutions, and a lot of the retail products and some of the B2B products being, playing in the gray areas, more and more clarity that comes about will just really kickstart what the potential is there, because the need is there, the opportunity there is. I think the infrastructure needs to catch up.
Definitely, it just had to be done in the right way to ensure investor protection. Yes, Amy?
I was just going to mention one thing since Neil mentioned the ETFs. EM folks would never buy ETFs. It's like a very developed market thing. Sometimes you speak to friends and like you were saying, like it's user experience, like, oh, I bought the ETF, I have exposure to Bitcoin or whatever else. You don't hold the Bitcoin. I mean, everybody in this room knows that, but like people that are coming in from the traditional finance space still feel that they at some point like have like some protection if something happens to the US dollar and all those other like narratives that you hold the ETF. All you have is price exposure to the underlying asset. And by the way, it only trades during like US market hours or if it's an ETP in the European market. So just personally as an EM person, I'm like all for direct exposure to any of these assets.
Mm-hmm. Excellent. And clearly things are happening in all those markets in the Middle East. You were talking to me earlier about China, India, Turkey. Things are moving at a very fast speed because those are emerging economies. They grow quickly. So we shouldn't be perhaps so concentrated into what's happening in Europe and the US with regards to our industry growth. There have been quite a few panels on stablecoins already. However, stablecoins are important for international trade as well and can make a huge difference in emerging markets trade. So let's touch on that also because they sometimes are the first touch point into crypto for many individuals as well and corporates. So let's talk about how stablecoins can facilitate international trade in emerging markets. Is that a trend that we are seeing already, moving flows of trade with stablecoin payments?
Yeah, I think there's a lot to unpack here. I think this topic is a massive one. It's very rapidly developing right now, and yeah, it has a lot of prospect. But just to understand the situation in which we are currently in the payment space. So the average transaction, like if you're sending $200 cross-border, that costs you on average 6% in fees today. That's a study done by some McKinsey folks. And if you are putting all of the fees that the payment industry is collecting all together, in a year, then you round up to $2.3 trillion a year in fees for what essentially is an update in a database, really. But that $2.3 trillion is approximately the GDP of country Italy that the whole human society is paying each other for what essentially is an update in the database. And so this is the problem statement I think that we should be kind of focusing on, and of course a lot of people are focusing on, and I think this is what crypto is going after, because in crypto, using stablecoins as means of settlement, we can bring those costs down to a fraction of that. I mean, I see it myself, like in my trading business, like I can move money from, say, Philippines to, I don't know, maybe Turkey or Mexico or Argentina, and it costs me bips, not percent, right? And so it's the savings that you can find from cutting out middlemen are enormous, and they are really huge in emerging markets, especially because over there you have some additional capital control limitations. You have forex costs on top of that just add on top of the bill. If we compare these $2.3 trillion to some other interesting numbers, for example, the cost that it makes, that it requires to maintain the whole internet, like the whole internet data flow in the world, is approximately $1.3 trillion. So making sure that we can move data around across the globe with all of the physical infrastructure is costing us, humanity, $1.3 trillion. I think that the moving money around is a subset of moving data around. So essentially, it should be a fraction of these $1.3 trillion once you have really revolutionized the whole systems and made it so that there's as little middleman as possible, which of course can be done using stablecoin and crypto payment systems. So that's just like a very high level potential what this technology has in stack. And yeah, it's of course already happening a lot. And I think that the first kind of systems I think that will probably start to fade out I think Swift is definitely, its time should come soon. It's probably older than my dad. It has to fade, and yeah, I think that's should happen within the next 3 to 5 years.
Amy, sorry to stop you, Martins. You have the TradFi background as yourself, Neil. What do you think, and this is your view rather than the corporate view, but what do you think is stopping the adoption of the stablecoin adoption?
The one thing that's been most interesting to me, like the last couple of years, is everything, if it's supply chain, if it's lending, if it's payments, it forces traditional finance. If you think about a lot of people that run businesses, they might have come from backgrounds in strategy or sales or consulting. They are not technical, detailed people. And when you start getting in and changing the way things work, it becomes very technical extremely quickly. I mean, I've even been on calls and I'm like, I don't exactly know how that like lending or that payment system or how many people touch it or what does it need. And you really get into the details of this space very quickly. I actually think that's one of the hardest things that we're dealing with right now is, and you know, you're talking about, it's not like you're just talking about like, oh, crypto as an asset class. It's hitting like every asset class. It's hitting every service activity across financial services. It's creating new service opportunities across the space that didn't exist before. So there's a lot to uncover. And just to bring it back to that supply chain, I mean, you talk about, you know, going from a Brazil to Central America to somewhere in Europe to a ship that's going to the Middle East. How many people does it touch? How many currencies does it touch? How many middlemen are involved? There's an opportunity there with any real low margin business. Any BIP that you can cut out is money in your pocket, and there's an opportunity there.
For that disintermediation to happen. Yes, definitely. One of the things that obviously adds to the reasons for adoption is the amount of time that it takes for money to go from A to B. To your point, Martins, and I am going to use that to update the database because at the end of the day, that's what we're doing. So that capital which sits in limbo whilst, you know, the clearing banks clear the funds and settle them, it's a huge opportunity, you know. But anyway, that's for another panel. I wanted to turn to you, Neil, to talk a little bit about crypto as a collateral for lending as well for emerging markets, because you had an interesting example of that, and that could be another use case as well.
Yeah, it's less of an example just yet, but hopefully at some point we'll see a lot more of this to come. One of the companies I was responsible for, again in a past life, was a Kenyan agricultural lender. And what they would do is they would buy wholesale seeds and fertilizer and lend it to farmers across Kenya and Zambia. Great business, really bringing down the borrowing cost for these farmers. To give you a sense of perspective for everyone in this room, the average loan value was like $140 per year. And what they would do is they would plant the crops, have a higher crop yield after the long rain season, and then pay back the loan in Kenyan shilling. So there's a handful of risks there. It was actually a VC-backed business, or is a VC-backed business, has a few foundations, you know, is on their cap table, on their board. It's a really good business for what it does, and it helps a lot of people. The reality is, with poor seasonality, so you know, poor crop yield, year to year that varies, with the Kenyan shilling devaluing over time, and then of course the occasional bad debt here and there, you end up depleting your capital reserve quite quickly. It's not that self-sustaining. And let's say a hope for the future is that we can start to think about, beyond stable coins for emerging markets, how do you think about Bitcoin, for example, to begin with, as a capital asset you can borrow against? Not saying you go out and do 70% LTV borrowing against Bitcoin, but if it's 10, 20% LTV, if you take a long-term view that it's an asset that grows over time and you can withstand the volatility, and yes, there's maybe some hedging costs required, we were chatting about before stage, or maybe there's some even lower threshold that you need to start off with to be comfortable that you're not going to lose your collateral. I think that's a very self-sustaining way to start to think about funding in emerging markets. And I'll give you a UK-based example where I'm based. If you're a small, we're focused at Feria on SMEs. If you're an SME and you're trying to get financing for a business that produces maybe $1 million to $5 million of profit a year, there are maybe sub-10 lenders in the entire country who will lend to you. We've been doing a bit of research. It's about 12 to 15% all in, not including fees. Maximum 5-year tenor, which means you can only borrow for 5 years and you pay it back. But you don't pay the loan back at the end of 5 years. You pay a little bit back like a mortgage every year. It's about 20% amort, straight line amort there. Can you imagine borrowing £100 and then giving back £35 after year one? That really is painful to a lot of people and doesn't really work for a lot of people. If you think about other sources of collateral, if you deposit Bitcoin and Aave and borrow stablecoin dollars against that, you're paying what, 5-7% yield? You could probably get it cheaper in some other places, a bit more expensive in others. It's still single digit versus double digit. There's no amort there. You're taking floating rate risk. There are other risks associated with this, absolutely, but I do think that is a, let's say, hopeful, optimistic possibility to really aid in SME financing and other financing in emerging markets.
That's interesting. It's probably something that we will hopefully see developing more and more in the future. We are nearly on time for the session. I wanted to say thank you to everyone for staying. Hopefully we've shed some positive light into crypto adoption, and also we've opened your eyes into looking at other markets outside from the US and Europe. Please join me in thanking my panelists and enjoy Paris while you're here.
Thank you so much, everyone. Amy, Martins, Neil, and Soledad, thank you for that conversation. I was born in an emerging market in the Caribbean, in Jamaica, so it's always good to hear what's happening and how the technology also is penetrating those areas and bringing more access, especially around finances. I am excited to welcome our next set of speakers, and you guys have been great, by the way, so I'm just going to ask you to give yourselves a round of applause for your attentiveness to our speakers and thought leaders. Go ahead, give yourselves a round of applause. You guys deserve to get recognized too. Wow, you guys are not that excited for yourselves. Well, I hope you show more excitement for our next set of speakers. We'll be discussing